The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. As always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And we're at 24.45 on the S&P cash, basically flat on the day. I did go long the S&Ps yesterday. When I got back to break even today, I went ahead and cashed out of that position. The reason why is geopolitical. And, you know, if we would have heard some more war saber rattling, I would have felt better about staying long today. I didn't think the market's weak. I don't think it's going down. The question is, how does the risk-reward set up when you think that there's always the opportunity for another shoe to drop? Today may just be a day that we don't have much about North Korea in response, but my guess is that that response is coming, and I want that second shoe to drop before I get back in the markets, either long or short. But reading The Art of the Deal and knowing our president, the idea that he's just going to sit back and take this after saying that there would be fire and brimstone or fire and something or fire and fury, there's going to be response. My guess, though, is this is not going to be the response that all those that watch him that haven't read his book think of. It will probably be some asymmetrical kind of response. Maybe go after his patrons in China, that is the patrons of the North Korean dictator dope. And maybe he is, maybe there's, I think that there's going to be some way that they're going to go after the purse strings. For the most part, China said that if we attack them, that they'll go in with North Korea. That kind of just makes you think that they've been putting him up all along, that he is truly their puppet, and why he had to basically develop their own nuclear weapons. This way, China can threaten the USA with nuclear weapons, but not have to pay any of the penalties. They'll just point the fingers at, of course, the North Korean dictator. So the question is, how does the United States response come, and where will it come from? My thought today is, and I don't know if it's better than 50-50, but there's going to be some kind of reciprocal trade problem for the Chinese. And if there is no response like that, then I suspect we probably do have some kind of military response brewing in the background. Do we sink one of their subs? Do they just start disappearing? No one know where they went? Do we, do a few people just kind of defect? Do we just start shooting missiles that land 10 miles away from their shore? And maybe we put up a little target and just sit there and hit it time after time after launching our own missiles. There will be a response. And the question is, in the past, all the State Department people have said, just don't upset them, just don't upset them. They won't develop nuclear weapons. Well, now they have nuclear weapons. And I'm sure the same people that were wrong before in the State Department are going, just don't make him mad, just don't make him mad. Well, I'll guarantee you that won't sit well with the Donald. He is not a man to be timid or sit back. There will be action of some kind. I think you can think of that just in his psychological profile, and that's what I'm kind of waiting for. So, to me, the risk here is we're probably going higher. And I think that higher is probably 70 or 80%. The problem I have is the unknown of what the response is from the U.S. government, and that's kind of what I'm waiting for. That last 20 or 30%, well, we go down 40 or 50 points on something that happens. Maybe it is a little bit of a trade war to start sticking it back to the Chi-Coms, who I think probably everybody thinks in the U.S. government is really behind the squirrely little dopey dictator from the north. So what do you have? Volume's just slightly better than yesterday. 1.67 billion shares. We came in just under 1.6 billion shares yesterday. So the volume did pick up a little bit to the downside. We got to 24.28 and bounced fairly decently. But again, I'm more willing to sit back and wait for a better shot. Kind of like Maverick, just had to go out there and fly around a little bit and then come back in and wax us some Ruskies. Well, guess what? I think that's what I'm doing here. I'm going to reset. I don't think that there's a ton of money to be made. I think there's some money to be made. The problem I have now is that the risk is stepped up to the downside, although it is continually or still the minority of the risk. It's just a lot more. So I think even though the chances that we go higher are better, we're just not going to go that high, and the chances of something actually happening are probably lower. When you think about what's going to happen, my guess is it would happen on Friday, and that way the U.S. markets would have the long weekend to adapt to them. So maybe the U.S. government may just take a page and decide to do everything at 4:30 on Fridays, leaving the market to stew until Monday's open, or actually on Tuesday's open. But I think I'm pretty sure we're going to get a fairly decent response, and it will probably be asymmetrical to what most people think it would be. I don't think he's going to attack them, but I think that there will be a tit for tat, as it were. Cyber warfare, don't know. Yeah, it's hard to tell. There's going to be something going on. So what do we have? Well, we're flat on the day. I got out of my trade flat. I'm all cash and everything, and I kind of like it. I would be more than willing to jump at some kind of opportunity. But again, 14 or 15 S&P points up, probably not the kind of thing I'm going to retire on. And I got to keep my eye on the prize, which is the home run ball. Anyway, as always, we like to start off this day, programming hour with a little bit of history. And of course, since we're going to break, we'll do that after the break. Anyway, 2444 risks, at least the way I look at them, are balanced. And as I said, homie, don't like to play quarters. And I don't want to flip for a 50-50 bet. Unfortunately, if you multiply the winnings times the losing, and they're kind of just the same right now. I don't think that there's a big bias either way. And I like the chips to fall on my side of the line. Talk about this more when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
That it's all just a little bit of history repeating.
On this day in 2005, Hurricane Katrina and the waves makes landfall near New Orleans, Louisiana. There's a Category 4 hurricane on this day in 2005. And we kind of always think that everything is new. People only live, 70, 80 years or so. Things happen over and over again. Of course, I don't know how much people are talking about it. They say that the Katrina was the worst hurricane ever, and I'm thinking, well, it could have been a lot worse. There was that hurricane in Galveston that killed 1,900, almost 2,000 people. Wasn't that worse? What's worse? Is this one worse? Is another one worse? And then, of course, everybody gets into the brouhaha of somehow trying to figure out a statistical bearing on why hurricanes occur and why. Generally, there's a push for a political reason. But I'm going to ask you this question, and maybe someone can answer it for the end of the show. And that is, how many years of data do we need to know in the U.S. to be significant in predicting hurricanes? Just on a statistical basis. It may be so random that we cannot tell. But we know that you have to ask about 1,800 people in the United States to get anything close to a consensus in a survey. How many years would you need in just to start predicting hurricanes? We haven't even started collecting data since 1780. That data is somewhat suspicious because guess what? We used Fahrenheit temperature gauges, and why they were great for their time, they may not have been accurate. So there's a lot of different things going on. But just a quick question. Statistically, how many years of data do we need to predict weather? Not climate, just even weather. whether it's random or not. Just a thought. Al Gore, oh, his poor movie didn't make it. Okay, so what else do we have going on out here? Okay. Come on. There we go. Got to get your charts up and running. Saw some noise out there about IBM today. So let's go and take a look at that. We've been talking about this thing getting back down to this previous gap around 139. It has finally done it. It's got a little bit of a bounce. You are looking, or at least what I'm looking for, is this low at 136.80, though. That's the June 27th low. Already seeing a lot of people push IBM in the last couple of days, and it always makes me nervous when you get those kind of pushes when there aren't many people or when you haven't actually tested the previous significant low. And that 136.80, we're certainly kind of in those candles, but I would love to see this thing actually test that 136.80 low from June 27th and test it with a lighter volume. Now, I think last week somebody on TFNN was talking about IBM. I asked about this 136.80 low, and they didn't see it. You know why? Because it wasn't set up for split and proportional cash distributions. So they did not see it. So the question is it important to put those in? Or does it matter? Another good question for today. I think it does. But that's just me. What else do we have going on out here? Let's take a quick look. Everybody's yakking about Apple. I talked about it last Wednesday. It seems like everybody just got on the bandwagon the last day or so. And that is the 12th of September is the day that they'll start talking about the next iPhone and its features. Expect it, and it has the last 3 iPhones. Expect the details to start to leak about a week before Apple actually ships the product. Normally, you get some pictures by some of the people on the assembly line who get paid a lot of money by websites to get pictures of the iPhone before it goes out the door. Even if it doesn't, they can just look and read the part numbers off and tell people what's inside it. So there's always kind of a little bit of a leak, and it normally happens within the last week before the product ships. Before they show it. Now, the ship date would probably not be until the 27th, be kind of late in September. And from production numbers from people in a lot of the Taiwanese newspapers, it doesn't look like these things have actually even started to get any kind of volume prep on them. Figure that we're going into this weekend, come out of it. It could be into October before they have enough units to actually make the first shipment. And the question is just how many can they get into this fourth quarter? They wanted to have this thing ready to go and ship by the first week in September. Now they're just showing it, so they're at least 3 to 4 weeks behind. And the question is, are there going to be enough features? Will you buy, and this is another good question for the day, will you buy a $1,200 smartphone? We do know that the price of the Note from Samsung is going to come in at about $930, so it's going to be under $1,000. What is Apple going to do? We know this is going to be a much more expensive product just from some of the suppliers to Apple. It will be ratcheted up. They will have a much more expensive display from Samsung. We know that. It's going to be an OLED display, and that's probably going to add at least $100 to the price per phone. The screen is rumored to be wrapped much like the Samsung one, probably because they make it. And that's it. Anyway, Apple, new all-time high today. When we look at the previous high at 26.6 million shares on the 16th, we're in and probably going to get close to that with volume today. And it's very tough to go short the NASDAQ with Apple hitting all-time highs. Granted, not a lot of juice out here. But if we see this thing, I think we're either going to be very surprised with the price and what the new features are in it, or very disappointed. I don't think there's going to be a lot of middle ground come September 12th. So look for action on that day. And of course, look for action on several other products that have been ignored for a while. My guess is that they will take this opportunity to try to pitch a few of these things. The Mac Mini, some of the laptops, probably also see some movement that same day in Apple TV with their 4K version. So a handful of things going on. We looked at that. When we come back, we'll look at Microsoft real quick. And what else? That's it. You got to give me a call. 877-927-6648. Email me at path@tfnn.com or post a message in the den.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And John from Sebring wants to ask what I think about the IWM. You certainly came off of it, and we're in the bounce phase here. Let's take a look at the retracement so far. And what you're going to have here is that you've basically got to the 382 retracement today. That was 137.95. 99. The 0.5 is 139.18, and 140.38 is the 618. So we're looking for this thing to come back in here. You're back into this pretty heavy candle down of the 10th of August that had 41 million shares today. And we went back and turned lower, but just about 14 million shares today. So you are coming up on lighter volume. This is, basically got to the 382 today. So the question is, what happens? And again, you got really kind of a mixed bag here, and I don't like coin flips, and I have a feeling that this week after last night's missile test turned into some level of a coin flip. Probably had a few ill-advised moves in the market. I can't be short, and it's very tough for me to be long unless I would buy options. But guess what? We're going to go into a lower volatility and lower volume the next couple of days. So even those look like they're probably poor bets at the moment. Cool hand Luke said it best. Sometimes nothing's a real cool hand. And until something changes out here, I really think that the odds are 50-50. So I'm not much of a gambler. I like to know when I have the odds and the wind at my back, and I don't see a great deal of that right now. TSLA, question about TS, do I see anything? No. I'm still looking at that 370 area to come back into. Is there anything else that, well, other than that, I got a special request.
You served me well, Hybrid. But still, you burn some gas, and so you disgust me.
Well, if you're disgusted by hybrids and you want to go all electric, this is kind of it at the moment, that and the Chevy Volt. But just get ready. They're going to be a handful more this fall, and then a ton, absolute ton, 30 or 40 of them in 2018. So we're just getting ready for the deluge of electric vehicles. Just nothing in this one today, so I can't say a lot. I still suspect that if we're going to make some kind of long-term high, that we're going to see Tesla come up and test that 370 area on light volume. It will probably be the first to get up there with nothing and then roll on over. That may take another month or two, may take 1 week, but I suspect that some of these stocks that have kind of failed, come down with volume, come back up on light volume, and now are just kind of consolidating, are setting up some major failure patterns, or the possibility of major failure patterns. And get, mid-September, late September, we may see a few of these roll on down, but I don't see a lot right now that suggests the end of the world. So, what happens to all those lithium-ion batteries? Well, they're probably going to not revamp them. They're going to probably recycle them. But again, my problem is not so much what happens to them as the failure rate, which is mean time before failure rate's about 5 years. So you're talking about $20,000 for a battery pack. If someone told me I was going to have to put a brand new motor in my car in 5 years, I don't think I would buy it. And that's always the thing. I love the cars. I love the performance. I love everything about them. We just need to get something that powers them, that doesn't die on average in 5 years, that works at minus 10 degrees, that works at 120 degrees Fahrenheit. I still see these things having all kinds of issues. And of course, the parable, or not the parable, but the bookend of this is all the self-driving cars that can't drive themselves as soon as there's some snow, ice, rain, or fog. So basically, if you want self-driving cars at this moment, and probably at least 3 or 4 years in the future, they are not going to drive in anything other than perfect weather. And that's why you see these things always out in perfect weather. I'd like to see a few of these things out in storms. As soon as it starts to storm, they put a human in it and they drive it back home. Because guess what? If you can't see, you can't see. So what else do we have? Take a quick look. Also got a request to look at TLT out here. We see any kind of topping action. We've been looking at that 128 level. We spiked it today. Now, what are we doing this? Well, we spiked it and instantly reversed. 128.57 on the TLT on June 26. That was 8.4 million shares. We got 8.4 million shares. This hit it within a couple of cents and instantly reversed. We talked about how I disliked the way that this thing came down on huge energy off that June 26th high into the 122.58 July 7th low. This bounce has been very tepid and slow. It did come up here. You did have volume, so you do have the opportunity to retest 128.52, 128.57 again. But the juice off this July 7th low has not been anything that confirms that you're in anything other than a big trading range. The failure here today does mean that you could come back down to the 122.58 low previous. Let's take a look again at this thing. That's kind of it. You do have a kind of a good consolidation and congestion zone around 124 though. So is this thing going to come straight down? I suspect that if it does come back, the first stop is 124. If you get light volume, maybe you get another retest of 128, heavier volume, and you're right back down to the 122.58. So we continue to look at those. Another question to look at the SMHs. Keep them coming. path@tfnn.com. Enjoy your emails and your pithy comments. Pithy, pithy, pithy. Nice kind of inside move here for the SMHs today. Again, these things are in a triangle pattern. They've neither busted up or down. Again, I'm kind of a little bit more thinking that we will have some kind of bigger move out of the range that we're in once we see some of these at least pick a direction. And I'll probably fade whichever one that these things bust out of. But there isn't a lot to pin your hopes on so far right now, other than the fact that these things do tend to continue to have lower highs and higher lows. And you're getting pretty far into the apex on this. That's why I keep on thinking that, statistically, if you're looking for this market to roll over, I think you're much better off next week. We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And I'm sending out a pithy little comment here. You can always email me at path@tfnn.com. Give me a call at 877-927-6648. And, of course, put a message in the den. And, of course, everybody in the den, the densters right now are looking at this dollar going, my word, what a little dip out here. Did this just run everybody down 60, 70 cents and come back out? But guess what? Flat on the day. 92.15 is the last quote I see. So what do we have? Flat on the dollar. Let's take a quick look. Crude's off about 13 cents. No big deal. Gold did kind of spike, of course. May have been at least a temporary blow off top. Just up $2 now. And silver, it's off, 2 cents or so. Copper up a penny and a half. And, of course, the thing I keep looking at is whether or not natural gas can hold $3. Again, a lot more natural gas production up in the shale northwest regions than down in the Gulf anymore. But is that going to help out natural gas? At the moment, it really hasn't broken out of its short natural gas, long crude, which basically unwinds to being long natural gas when crude heads lower. If we were to get a little bit more of a bounce out of here, maybe a little bit more in the long term. Let's go ahead and take a look at the UNG. But could we get enough downside in production from Houston to really get this thing going this fall? I think we could. There's nothing in the charts right now in the UNG that actually says that there's anything other than a doji coming out here today. Yesterday, we did have a little bit more volume to the downside, which ended up on the upside. So again, just a lot of consolidation, but I do like this pattern out here. We've really been going sideways since the 16th in the UNG, and that probably is making a fairly decent looking floor for this fall. And of course, seasonally, we've come to the time where it comes to at least start a stake in natural gas. I just haven't seen any reason to do it in the last couple of days. Let's go and do a few other things out here, which is take a look at some of the stocks that I've been interested in. Texas Roadhouse. I wanted to see a few. This had been going through its previous gap down. This gapped up on earnings on the 2nd of May, did so on 4.2 million shares. Now we're back into it today on 500,000 shares. We did kind of even go a little bit farther down, 45.91, but it has gone through here and made kind of filled this gap on lighter volume today. But man, I tell you what, retail restaurants, a lot of stuff. Man, people can't get out of them fast enough. UTX is part of a buyout. Wanted to see how this one did today. Nice spike off this one. We've been watching this one come in and go sideways for about 5 days into this previous gap, which is on the 21st of April. Did so on the gap up on 5.7 million shares. You can't do it with 6.2 million shares, which would have kept me away on this one. But you did go kind of sideways here. I have a feeling that somebody knew something and they were a big buyer right here in the low 115s every time for the last 5 or 6 days. Now that the news is out and you're up on some decent volume, 3.5 million shares already today. And what are they? Is it Raytheon? They're trying to buy Raytheon? I think that's who it is. And oh, Rockwell. What Rockwell's symbol? ROC, isn't it? In the USA? ROC in the USA? No? Or is it ROK? Rockwell. Okay. Not that big a deal. Maybe it's somebody else they're buying. Oh, COL. Thank you. I couldn't remember from this morning. That Rockwell Collins. Not the Rockwell, the bad one-hit wonder from the 80s, right? What did he sing? Somebody's watching me. And that wasn't him? Okay. Nice spike, but man, it didn't hold it, did it? In fact, UTX looks much better on this deal. So up, you got a little bit of volume, but again, not too exciting on that. Got a question to look at Micron. It is holding its highs. Okay, you're back into this gap, though. This is where the thing is getting very interesting. You gap down on earnings on the 25th of July. Did so with 51.2 million shares. You're back in it yesterday with 22 million shares. Today with 15 million shares. You did get 38 million shares as it approached this back on the 16th. But the last couple of days have been fairly light. And you're back up here. Micron got a virtual monopoly with Intel. So I'm not a big fan of trying to short these guys right now. Intel, how did Intel fare today? Tried to go a little lower, no volume, a little higher. I was just commenting on a board on Intel's new products from last week. And it's kind of buried in products from Microsoft, but pretty interesting stuff going on. Intel, I'm just waiting for their big hit to come in, for their ship to come in, for them buying Altera. And we're starting to see at least a few seeds of that from last week, which you can get in the Tech Insider. If you subscribe, you can always take a 30-day free trial on that. What else do we have? I think there wasn't that much. Let's go ahead and look at some from the day before, see if we had any more of these. Trivago, I wanted to see if this thing ever, we're kind of looking at this one hanging on this gap up that goes back to the 24th of April also. You got yet another bigger gap on the 28th. That one had 2.4 million shares. You pretty much have gone through that level, back down to some levels. You did start with a huge volume on about 8.8 million shares on the 4th of August on the downside, which just kind of pushed this thing down, just the momentum. But you may be finding a floor down here in Trivago and some of these other sites too, just on the CEO leaving from, what is that? Not Priceline, although we'll look at that one real quick, see how it reacted. Same thing, this one's back down to its gap, got into it, and kind of bounced today on lighter volume. So you're pretty good support levels in these stocks, and that's what keeps being problematic, being short here in this market. But again, 1.85 billion shares is nothing to jump up and down about. So we continue to see light volumes up and down And I hate to be in a low volume market, especially short. Not a lot of juice here up, not a lot of juice down. My money's in the mattress. So maybe we'll find an opportunity. Back.
Hi, folks. The 800th edition of the Gold Report will be published next Monday. To celebrate the last 15 and a half years of calling the gold market, I'm doing a special promotion. You can receive 60 weeks of the Gold Report for only $600. That is $10 a week, which is a savings of 50% off the regular price. If you want to understand the entire supply and demand equations that move the gold market, including where the XAU, HUI, and mining equities are looking to trade, if you want to understand the correlation between the dollar, the yen, the South African rand, bonds, and gold, the Gold Report is for you. I'll give you the entry price target, and stop for each equity, ETF, future, or option trade. The Gold Report is a long-term newsletter with the focus on building real wealth to a successful portfolio of gold and silver equities. You can take advantage of this special promotion until August 27th. That's 60 weeks of the Gold Report for $600, which is a 50% savings. Go to the front page of TFNN.com or call 877-518-9190 and order now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're looking at the IBB. Got kind of close. We're at 319.46 is the 618 retracement. So you've got just a little bit more to go to get that. Of course, today you've got 411,000 shares. Yesterday you had 1 million shares. So again, this is what I'm kind of thinking that the easiest road in the bounce this week is kind of over. We're at 2446 on the S&P cash. Volume continues to be light, 1.9 million shares. Tomorrow, of course, come about 2 o'clock in the afternoon, the roads will start to be packed as all the chieftains and big men of Wall Street go for the last big hurrah out to the Hamptons. And from the helicopters to the B-52s to kite surfing all the way up there, we'll be regaled by CNBC and Fox Business News and Bloomberg with how the men of inordinate wealth make it up there from Wall Street. But what does happen is almost always, 90% of the time, what do we get? Lighter volume, reduced volatility. It makes it very tough to buy options or think that, if you've got a fairly good market that's fairly strong, I wouldn't mind being long going into Friday. The downside now is, like I said earlier in the show, I'm just waiting for the other shoe to drop on what the response is for the United States. Maybe that gives us one more good opportunity to buy when we wash out a few of the people. But nothing happens. I think you need to be long, but risk reward, pretty balanced long and short here. I don't like point flips, so I got my money in the mattress. A little long. In the meantime, sell when you can, not when you can. We'll see you again.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.